Okay, hi everyone. A very good morning. You've tuned into Market Fatafat on ET now with me, Mubina Kapasi. Markets looking a bit weak. We started off on a strong footing, but we've since then come off quite a bit from the day's high, and now we are staring at a triple-digit cut for the Sensex. The Nifty as well is losing. We are sub the 11,900 mark, and as you can see in the last couple of minutes, the selling has only accelerated. And as you know, Market Fatafat is flagging off for all those individual movers and shakers in trade. But before we do that, let's connect with the management of Bata India. Can we go to Bata India? Okay, you know what, before we do that and while we'll wait for the guests, let's do one thing. Let's just take a quick look at what the markets are up to currently, what exactly are the movers and shakers at this point of time. And if we look at the advanced decline ratio, it seems to be more or less even Stevens at this point of time, with the losers slightly gaining at this point. Okay, let's go across to let's introduce our guests then, and we have with us today on the technicals Sameer Chavan of Angel Broking, and from our research desk we are joined by Pranay and Varun. So morning all of you, and Pranay, let's start off with you. BPCL first, and look at the way it is surging today. This again after some very interesting comments from the finance minister that by March 2020 the divestment will be done.
Well, yes, the finance minister on Friday after market hours reiterated that the divestment plan is well and truly on track, and they have reaffirmed that the divestment will be finalized in all probability by the end of March, so it should happen in this financial year. She also mentioned names like Air India, for which the roadshows have already begun, and progress seems satisfactory on that front. So basically, government is going to push the pedal on its divestment, and BPCL, which has seen a solid move, was accumulating for such a long time, has started to move up once again on the back of these comments.
All right, BPCL at 524. That will certainly be a major trigger, for BPCL if and whenever the stake sale does come about. Okay, moving on, telecom stocks as well have caught the market's fancy after finance minister's comments that no company should go out of business. Airtel, of course, is gaining 4.3%, but Vodafone Idea, 20% surge over there. So, Sameer, your view on these stocks, on Airtel?
Clearly, this has been past. It's sturdy wall of 390, 400, and with this move, it is appear that the stock has come out of its 2-year concession zone, and from here on we expect this upward trajectory to continue. So any dip from current level, a minor dip would be a good buying opportunity. One can keep a stop loss around 388, and we expect this stock to extend this rally towards 434, 440 over the next few days.
It's a buy on declines with the target price at 434 rupees. Let's move on to stock number 3, Muthoot Finance. Varun, what's exactly the news trigger here? Yes, we did have the second quarter numbers, but also some M&A opportunities that Muthoot is scouting.
Right, Mubina. So there's a couple reasons. Firstly, we had the management join us this morning as well, and they shared their perspective on the Q2, which we never managed to get post the result. So before I talk about the M&A activity, just, there's been a temporary blip in gold for them, and there was a liquidity crunch which actually led to an overall slowdown in Q2 for Muthoot. As you might find that hard to believe given the results, but there was. Now that seems to have rectified itself. They've managed to raise money. They've also diversified their borrowing mix by borrowing from overseas instead of depending entirely on local banks. Now the situation in Kerala also seems to be improving, and the management says that Kerala, although was the beginning of the company, it today represents a very small portion of the overall business. So compared to its peer Manappuram, Muthoot has given a much more loud or vibrant guidance, I'd say, going forward into H2, which is why you see the stock reacting really positively today. And also in the latest development, they are looking to to enter the mutual fund business. Let's also remember they're highly diversified, so they have insurance, they have CVs. So this will be another forward integration for them. They're looking for an MF business, and IDBI Banks seems to be the one that they're eyeing out for. So no closure on the transaction yet, but we'll update you more once we get more details there.
Yeah, remember that we do have that surge in gold prices that aided recoveries as well for Muthoot Finance in the quarter gone by. Okay, moving on very quickly, Pranay, L&T, why has, what exactly are the reasons cited by Citi for their continued optimism?
Well, Citi has first of all upgraded L&T Mobina, and the target price has also been increased by a handsome 8-9% to 1700 from the earlier 1563. First and foremost, they see that ROE will jump up to about 16% levels by next year from 13.9% last year. Secondly, they are also very well placed in the core engineering and construction business. A lot of order flows are expected with the government budget announcements on the infra side in the second half of the year. But secondly, there is some asset sale which is expected on the electrical and automation space, and that is something which will strengthen the balance sheet as the funds will go towards that. So L&T is the preferred pick in infra for them.
All right, that's L&T for you, 1379. Now let's just take a quick pause on Market Fatafat and bring on board the management of Bata India to talk about their second quarter numbers, the festive season demand, and also, of course, the business plans going forward. We have with us Mr. R.K. Gupta, the CFO of Bata India, to talk about all of this. Mr. Gupta, thank you so much for joining us on ET Now. And I would like to kickstart the conversation with that 7.3% top line growth, revenues at 722 crore rupees. Now, if we look at Bata's historical performance, I would say it's a bit moderate. But again, times have been challenging. So when you compare to that, it's not that bad. So tell us, how was the quarter gone by? What contributed to the 7% top line growth?
Good morning, Movina. This 7.3% growth in the quarter, we feel it's quite reasonable. If you see, retail growth is 6%, while non-retail is 18%, which was sluggish for last couple of quarters. We were putting efforts to improve our non-retail numbers, and now we are seeing the sign of improvement. Margin is also up almost 80 basic point. Expenses are down as a percentage of turnover. PBT, if you see, PBT is up by 14%, and profit after tax is up by 28%.
Front, you've certainly done extremely well. Also, you've been focusing a lot on some of the new initiatives, like the categories focusing on women and youth. You've been refurbishing and redesigning as well the existing stores. Plus, you've been, putting in some money for advertisements and promotion as well. So what sort of a response have you seen to all of that?
We are investing a lot of money into innovation, new product, stylish and latest design product. If you see, there is a campaign, new product every Friday. This is in all of our retail stores, which is giving us good response by the customers.
Okay, Mr. Gupta, yes, we were talking about how your margins have expanded, and while costs have come down, there's also premiumization, which is as well aiding margins. So at present, and to the sales figure that we are seeing, how did premium products grow? What did they contribute to your top line?
Premium product means conversion into premium product. It's a continuous process. These are as per customer demand. At present, premium product are almost 50% of our total retail basket. For retail margin improvement, we are working for last couple of years, means raw material price negotiation, cost optimization, factory optimization, these all are giving us good result into margin improvement.
I also see that Ind AS adjustment, I think, for your rental expenses, which is something that has, of course, moved that line item quite a bit. But otherwise, I mean, do you expect these costs to remain at this lower level because of the sort of changes you've made? And hence, should we see continuous improvement in margins from here on as well?
Our efforts are on, but everything is not in our hand. But efforts are on, which you have seen in last couple of quarters. We believe that the margin improvement will continue.
What was the same store sales growth in the previous quarter? If you could shed some light on that number.
SSG growth was 3 to 4%.
Okay, and what can we expect for the second half of this fiscal and the whole fiscal? What will be the same store sales growth and the top line growth?
For that, you have to wait for some time. As a company policy, we don't give any forward-looking statement, right? But we are working towards improvement of all these numbers.
Fair enough. So then, Mr. Gupta, we hope that we can talk to you after the third quarter numbers as well to get a sense of what, the Q3 and perhaps even Q4 will pan out for Bata. Thank you so much, Mr. Gupta, and we wish you good luck in your journey towards innovation and rebranding.
Yeah, for sure.
Rebranding Bata. Okay, that was, of course, the CFO of Bata talking about the numbers, 3 to 4% SSSG growth. There was a pickup in retail, so Bata's top line growth at 7.3%. But in particular, what impressed the street, I believe, is the profit performance. Nice expansion in the margins because of the cost controls and also to a certain extent, premiumization. Okay, let's take a look at the RWI small case and see what that's up to. As the markets crack significantly, you are seeing the RWI small case as well slip below 565. It's 0.5% of a cut seen over there. And now we'll take a very quick break on the show. Do come right back for the countdown of big stock movers. Okay, welcome back. You're watching the Market Fatafat on ET. Now, let's continue with the countdown of movers and shakers and talk about another big stock that's gaining very smartly, and that's Just Dial. The trigger being UBS's big upgrade that has come in for the stock. Now, it's an upgrade all the way from a sell to a buy, with the target as well being raised, from 520 to 825 rupees. Now, here are the reasons cited by them. First up, they believe that the core business will continue to improve from here on. The B2B opportunity, which most investors have not really been focusing on, will positively surprise. Plus, the whole efforts that have been put into marketing and curated content could help revive growth. There is competitor pressure, but that, according to them, has somewhat eased. And also playing the role of aggregator as it indirectly monetizes Google platform and traffic as well. So that big upgrade is something that's spurred some buying for the stock price of Just Dial. Remember, it had touched a level of close to 800, subsequently eased off, and now again it's showing a nice uptick today in trade. Okay, moving on, Samit, let's talk about Grasim. Anything on the technicals that you'd like to flag off?
See, clearly in the last 3 days, we have seen good traction in this counter. Stock has managed to give steady recovery from lower level. However, it is clearly struggling around its 200-day moving average. So 800 is the level to watch out for. As of now, it is undergoing a consolidation phase. But once the stock gives a breakout beyond 800, we could see a good rally, getting unfolded. In that case, stock can easily head towards 840, 850. So as of now, one should wait for a breakout to happen beyond 800.
Okay, wait right now for a breakout. That's Samit's view on Grasim. Very quickly, Varun, Sterling and Wilson, a big drop from its IPO price, and then you have all of those debt repayment obligations that it's not being able to meet.
So, this is one stock that I'd say has been a very disappointing IPO over the last, couple months. Now, the listing happened very recently. It happened at a much higher price of around 720 rupees. That implies a market cap of 1,000 crore. Today, you see this stock trading at around 320 rupees. It's erased a lot of that value. So, a lot of the investors are going to be pretty ticked off about it. And the market cap has more than halved, around 5,500 crore. Now, let me tell you why. There was certain clause set in the RHP which said the promoter over here was going to pay down debt in this company with the proceeds raised from the IPO. Now what's happened is that post the funds coming in, the funds haven't been allocated in the right way, and the designated debt which was supposed to be paid down has not been paid down. Now maybe the promoters using these funds to settle debts at another level or somewhere else in the company, but not where shareholders were expecting. So a sharp, ruthless street is really not happy with this. 2 days, I think 20% fall both days. So pretty negative on that counter right now.
Okay, 20% gone, and it's the second day that the shares have hit a lower circuit. Okay, Pranay, HIL, a stock we don't talk about very often, but what's the latest update?
Well, Hyderabad Industries has added capacity for PVC plumbing pipes as well as soil water drainage, rain or SWR pipes at its Telangana plant, which it believes will add materially to its revenue and growth in the second half of this financial year. So therefore, it's a stock in focus.
Okay, 6.5% higher for an HIL in trade. Now let's talk about financials, because we did have those changes of sorts made in the IBC. What exactly do they mean for the financial sector? Let's see what brokerages are saying about that. First, JP Morgan says that SBI and ICICI Bank are best exposed to play the resolution cycle, and the stressed NBFC resolution framework is a positive. Nomura said that the Supreme Court judgment as well favors banks. It's a positive for SBI and ICICI Bank. So PSBs like SBI have continued their upward journey since Friday's trading session, where we saw 4% surge for a stock like a state bank. Okay, moving on, Sameet, M&M, today a big decline seen in the stock price of this one. Autos itself are a bit all over the place today in trade. What's your view on an M&M?
See, Mubina, although we are slightly a bet on the entire auto space, this is the one stock that we have been avoiding regularly, as there is no buying interest in this particular counter. 560 would be seen as a key support level for this particular counter, and on the higher side 200-day moving average is placed somewhere around 600, 610, so that would be seen as a major hurdle. So as of now, we expect this consolidation to continue. So if this stock has to regain any kind of strength, stock needs to surpass 610, 615 convincingly, along with rising volumes.
All right, 575 for an M&M, and yeah, Sameet has been avoiding the stock for some time now. Okay, and Varun, RBL, what exactly are you anticipating? What's going to be the consequence of the SBI Cards IPO on RBL?
Right, Mubina. So it's going to be a really positive impact if you ask me, or at least analysts on the street. Now let me tell you why. SBI Cards IPO is going to eventually, the valuation they're looking at listing it at is currently higher than RBL Bank, right? Now if you look at the credit card players, who are the largest guys? You have SBI, HDFC, Axis Bank, Kotak. These are your four largest players. Now if you look at the market cap of all these banks, it's each one of them is in the multi-lakh crore market cap range, or at least 1 lakh crore. The only outlier is RBL. Yet the same bank RBL, which has a very suppressed market cap and the book value is also halved over the last year from around 4 times to 2 times, has one of the largest credit card businesses, 5th or 6th largest credit card businesses. Now this is dependent in part on Bajaj Finance. They have a very crucial tie-up there. But if you look at the way Bajaj Finance is growing and the way that company is doing, I don't think RBL credit card business is going to see a slowdown anytime right now. So what we're flagging off here, or what we've come up with, is that if the SBI listing happens successfully at the valuation they're targeting, which is around 10-20 times, somewhere in the 30,000 crore range or 20,000 crore range, that is going to give RBL an immense growth trigger and a serious valuation push. So based on that, we just want to alert everyone to look out for this counter.
Okay, so look out for RBL, especially as the news flow on the SBI Cards IPO develops. Okay, Polycab is another stock that's surging, and how? Citi has maintained a buy on this one. They've upped their target price from 950 to 1044, as they believe that By the way, they're also increasing their target PE multiple to 20x from 18x. This is on account of Polycab's focus on the FMCG business. In fact, that is something, according to them, that will lead to a re-rating for Polycab. Also, continued traction in the FMCG business as well is something that they are expecting. So Polycab higher by 3.5%. And Sameet, Mahanagar Gas, this stock has been gaining very smartly for the last couple of weeks. Do you expect this sort of an uptick to continue?
Yes, Mobina, clearly this stock has been outperforming along with its peer counters IGL, which is now trading at all-time highs in an uncharted territory. This stock too has been steadily moving higher, a series of higher top, higher bottom formation. So we expect this northward trajectory to continue. Recently we saw this stock finding some profit booking around 1050, but it's a matter of time. We expect this stock to surpass this hurdle and move beyond 1050. So 1100, 1120, these are the next levels to watch out for.
Okay, it's at the day's high, in fact, MGL. But with that, we're out of time, so we'll wrap it up on this edition of the show. Varun, Pranay and Sameet, thank you so much for joining in. Stay tuned. We'll be back with another edition at 1:30.